Welcome back. The market's holding steady on this last day of trading for the year. Dow up about 115 points right now this hour. Coming up, you could call it the tech wreck of 2018 while the tech market has fallen. And will that trend continue next year? Plus, expert advice on where you should and should not invest in 2019. But first, the action in the market in the past 5 days for me in these past 5 sessions paints a picture of a market that's looking for fresh leadership, but not necessarily to replace momentum names in tech and communication services, but to sort of share the load. Right now, consumer discretionary names continue to outpace the rest of the market, led by a mix of oversold brick-and-mortar names like Best Buy and Kohl's. Former momentum darlings like Chipotle act great, and then there's Amazon, which seems to have put in a bottom. Technology, though, seems to find different leaders every single session of late. Right now, everyone's jumping on the bandwagon with Salesforce.com, but Apple, which has such a massive weighting in this sector, has to regain something to the upside. Even if it's at a pedestrian pace, it's got to participate. Then there are communication services. Really, that's where the majority of those momentum names trade. Netflix, Alphabet, Google, Facebook. These are names that all have individual challenges coupled with increased regulatory risk, but valuations have come down so dramatically. Meanwhile, deeply oversold sectors like financials and materials, they've hinted at turnarounds of late. The S&P financial sector, by the way, off more than 15% for the year, 23% from its 2018 high, has a forward PE ratio at a very attractive 10. Now, for me, though, the problem is I still don't know or haven't found a solid handle on why this sector has performed so poorly in the first place. Materials, on the other hand, also changing hands at a pretty attractive PE ratio. Forward PE ratio there, 13.5. That's well below the S&P 500, 14.5. This after massively disappointing this year. I see huge value in so many of those names. I will admit, though, I was also confident at the start of this year, too. Overall, I'm excited about the market trading higher with a greater variety of leadership in 2019. For more on the tech wreck in 2018, Disruptive tech research founder Lou Basenese. Lou, first of all, technology. Next year, you have a lot of IPOs that are probably going to come out. The Ubers of the world, the Pinterests of the world. Could that be the ingredient that changes at least the market psychology revolving around these names right now?
Look, I think it depends on who leads out of the gate. If it's Uber, I think someone's going to hit the reset button on that valuation. That IPO is going to perform similar to Snapchat and struggle really mightily out of the gates. So I would look more towards Lyft.
You're comparing Uber to Snapchat?
I do. Look, I think Uber's IPO is going to be a massive reset on the valuation, just like Snapchat was. Snapchat needs to just go ahead and disappear already, as far as a stock investment is concerned. But yeah, I think Uber is, of the two, Uber and Lyft, I'm more constructive on Lyft. Uber's valuation just too frothy at these levels. I don't think it would be good news for the market if Uber was the first out of the IPO gate for the tech companies.
Airbnb, Planeteer, Pinterest, any of those names have the potential to sort of lead the parade.
Planeteer and Airbnb, I think, very bullish on those names. It, again, depends on valuation, where they come, what the demand is. But if you look at Palantir, it's capitalizing on data and cybersecurity, one of the biggest needs that has been criminally underinvested in the country for decades now. So I think that's a great opportunity there. Airbnb, got to see the financials a little bit. But what will be interesting, it will trade at a premium to hotel stocks, but how much of a premium will be justified? That's the $64,000 question.
And
there.
I'm a little worried about some of these municipalities taxing these industries or making it tougher. I forgot which city it was, but late last week someone put out a rental tax, right? So, you know, and you got to register. They're making it complicated, and I think they're doing it for, not only to raise money, but maybe to slow these industries down. So let's get back to the established names already. We can't talk tech without talking Apple. Where are you right now with respect to Apple? It has to do well. It doesn't necessarily have to lead to charge, I don't think, but it has to be trending higher if technology is going to do well.
Look, I'm going to be immortalized as the guy that came on here as the Apple fanboy. So I am still bullish on Apple long term. I do think you've seen analyst sentiment come in. The estimates have come in after the last quarter's report. I think we may get, after this holiday quarter, one of those once or twice a year buying opportunities where you can back up the truck. I think if Apple breaks below 140, that becomes a tremendous buying opportunity on a company, one of the world's largest, that is still growing earnings at 40% a clip quarter over quarter. So yeah, I do agree with you wholeheartedly. Apple has to participate. Otherwise, we're not going to see this tech rally continue.
Let me get your quick thoughts on the chip sector.
Yeah.
You know, some days they look intriguing, other days they don't. To me, that's where all the excitement is, whether it's NVIDIA, AMD, and some of these other areas.
Amen. 100% agree. Everyone talks about the Internet of Things. It's really the Internet of chips, right? It's all semiconductors going into countless consumer electronics and every other device we can think of. I like Broadcom. I think that's a great, safe, conservative way to play the chip space. They've had 6 quarters in a row of more than doubling profit. And when the NASDAQ was rolling over, down almost 20% in the last couple months, Broadcom was actually up 5%. That divergence is something that we need to be paying attention to going into the new year.
Lou, happy New Year, and we'll see you again real soon.